The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to TFNN. And this is the August 15th, fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Thursday. It is fantastic Friday. You know what that means? That means that you and I, we've got to do all that we can do to make sure that we have a fantastic weekend out here. I'll do everything I can during the next hour and sharing with you some extraordinary tools that help us identify where price is headed to. We'll take a look at the A to B equals CD tool. That's that lightning bolt pattern. We'll look at the Fibonacci retracements and expansions because the markets are always retracing, expanding, or moving sideways out there. And, of course, we'll take a look at Japanese candlesticks and any other pattern that we can come up with to help us identify where price is headed to. Now, the show here, it's a call-in talk show. It's an interactive show. That means we like to hear from you. Our call number is 877-927-6648. We want to see your eyes and ears and mouth, voice, right? We want to hear what you have to say about what the markets are doing. Maybe you'll see something. Maybe you'll share something that all types of listeners around the world would like to hear. So give us a call if you got a chance, folks. It is Fantastic Friday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off here right now. We've got Dow futures trading up 44 points. They're trading at 16,726. S&P futures up 4.5. They're trading at 1958. NASDAQ futures up about 14 points, trading out at 39.81. King dollar back 152. Ticks off 15 cents out at 81.49. Goldilocks, that's where we're going to start our day off and take a look at gold and silver. Gold right now trading off $20, trading out at $12.95. Silver down 32 cents, trading out at $19.58. Light sweet crude, that's trading up about 33 cents right now. That's trading at $95.92. Just a quick peek across the globe out here. We'll see over in Europe, the DAX is up 77 points. Right now, trade at 93.01. The FTSE up 47 points, trading at 67.31. A sea of green in Asia last night. You had the Nikkei was flat, up 4 points. And we'll have to take a look. Maybe if we get a chance, we'll see what it did intraday, intra-session. Hang Seng up 153 points, about 0.6%. Shanghai up almost 1 full percentage point, up 21. It closed out at 23.31. But let's first go take a look at Goldilocks. We're going to take a look at a couple of different things out here, just to try to identify where gold may be headed to. So as we take a look at gold, it's off $19 right now. Now, I'm going to put on my chart here. Hopefully, you're watching us on TigerTV. If you're listening on your radio or your mobile device at tfnn.mobi, thanks so much for doing that. You can catch the archive of this show. That way, you'll be able to see this chart, follow along at home. You'll be able to draw these same patterns in on your stock chart out there. And let me describe to you what it is that we're looking at here. And all that I'm doing especially if you're an e-signal version 12 user. That means you've got TigerTV in one little quadrant. Maybe you've blown it up to the entire full screen out here, and you can easily go ahead and add this pattern here. What I've got in place right now is just simply a rising price channel coming off of the lows for gold back in December. In fact, the actual low that was formed was December 31st. But what we like to use around here at TFNN is we believe that the body of the candle is the essence of price. That's certainly the way it is when you take a look at Japanese candlestick charting, and that's the way that it is when we take a look at price channels, whether they be horizontal or diagonal. In this case here, we're looking at a diagonal. So I'm using the body of the candle. I'm actually using the body of the candle from December 20th. That becomes my first touch point out here. We're trying to identify 3 or more co-located. Doesn't matter whether it's an open or a close out here. 3 or more in order to be able to cement a good channel line out here. Well, that takes us into the bottoms, into the lows that were back here in June 3rd, June 4th, June 5th out here. So where is gold likely headed to? Well, like one normal natural resting spot for gold to move down to is going to be down into the bottom of this price channel out here. Now, can it spike lower? Sure. But if the body of the candle rests right there and then we start to see a reversal, and we're going to go see if there's any other patterns there. If this area fails, there are at least 3 other patterns that become very visible to me as far as where price would move down to. You say, what would those patterns be? Well, 1 or 2 of those would be A to B equals CD downs. Let's take a look at what those are. Then I want to show you the potential of really a 3-drive pattern that could be forming down around this 1270 area. So if you take a look at my cursor, and it may not be today, but if you take a look at my cursor, my crosshair, and over on the right-hand side, I've got my cursor basically right at today. If gold were to come down and were to hit the bottom of that rising price channel, what you'd see is a price point of $1269.50. So that's what shows up on my screen here. It would be a little bit higher if it were Monday, right? So I want you to write that down on a pad of paper. $1269.50, $1269, whatever. All right, so that's that, and we're going to come back. I'm going to show you that pattern. I'm going to have to switch charting tools in order to be able to do that. So that's one possibility. And that's a likely, and in fact, if gold stops there, I'll show you that it made the same pattern at the highs here most recently as it was up here at the trading session of July the 10th. So that's one thing. If that area fails, where does gold go down to? Well, let's take a look at the A to B equals CD patterns, our lightning bolt patterns. We're going to draw 2, and we're going to take a look at the small one. The small one's the high on July 10th. That's going to be your A point. Your B point's going to be down here right around the July 31st or August 1st session. I'm not going to pay attention. It's just within a few cents of each other, so it doesn't really matter a ton out here because we're using this as guidelines, just like Jack Sparrow in the movie Pirates of the Caribbean. Now, a 1-to-1 A to B equals CD says 1258.10. So pretty easy to see maybe an intra-session spike. Could be today. Doesn't have to be today. I mean, that's quite a drop out there. But look, what we're doing is we're setting up patterns out here, tradable patterns. So today, tomorrow, today, Monday, I should say, Sunday night, Monday, or what have you. So you've got a 1-to-1 A to B equals CD. So a spike down there to complete that pattern and then get back above the rising price channel, that would be fairly potentially bullish out there. That's one pattern. If we see price close below that price channel out there, that leaves this smaller A to B in play here, but it also brings that larger one into play. And that larger one out here is where the A point is up at the March 17th high, the B point's down in the lows in June, and the C point happens to be where we began our A point for the smaller pattern. And that says 1194.40. So that's the larger pattern. So if we do see a break of the descending price channel out here in these price channels, they're very powerful, as we'll take a look at when we take a look at the indices or the futures contracts out here. That would be a secondary area. Now, if price were to actually make that move, I don't know whether it will or won't. This is where we're setting up trades here. If we were to make that move, what it would also be doing is it would be making a 100% move of a move. What are we talking about there? We're talking about gold getting all the way back into that December 31st swing point in the 1181 area. So you've got the larger A to B equals CD. That would be coming right back to a swing point. Swing points are your natural spots to always look for target areas for where price will move down to. Now, what was that figure I asked you to write down on a pad of paper? Yes, 1269.50, I believe, is what you said it was. I think that's what I heard somebody said that right through the intercom. So thank you. Now, If we take a look at gold, here's the continuous contract for gold. This works for us. Here's what's interesting about what may be unfolding right now, and here's an idea. If you take a look at the high that was made out here, the trading session of July 10th, what you'll see what we refer to as a three drive to a top pattern. That three drive to a top pattern, created by Larry Pesavento is the one that popularized it. I don't think that Gartley, I don't think that was a Gartley pattern out there. I think that was a Pesavento pattern out there. We'll have to ask Larry. And I apologize for not even knowing. Does it really matter? No, right. At this stage here, we want to take a look at similar patterns that could be unfolding. So if we take a look at that price high that was out here, three drive to a top pattern. Now we've seen price, we saw price move down off of that. And what would be interesting about this 1269 area, you'd have another three drive to a top pattern. If we take a look at the cycles out here, if you begin with the low on the trading session of July 15th and you move that thing forward to the low right out here on July 31st, you'll see that that pattern suggests that it should complete today, Monday, Tuesday. What's the actual date out here? August the 18th. What's today? The 15th. That's 3 days from now. That would be Monday. So Monday, you could be seeing, so Sunday night, Monday, you could actually see, if you were to get gold down to 1269, and then you just go move down into an intraday chart out there, see if you can see any kind of other pattern, any kind of other reversal out there. You'd have a fairly decent buying opportunity. What else would we have? Well, if we take a look at the last breakout session for Goldilocks, that was back here on June the 19th. Price would also be pulling back into a breakout area. Now, breakout area is a range, and the range can be either the bottom of the candle, where it broke out from. In the case of gold, that price point was at 1276.20. You got 1276.20, you got 1269. That's a beautiful thing. I always say you go back to the next candle or two, especially if it's created a swing point out there. In this case here, gold did that on June 17th. You've also got a 0.786 retracement level in that 1263 area. So I would say at this stage of the game, 1263 to 1269 is where gold needs to stop. If this pattern doesn't have to work, it's just a pattern that we're able to draw in advance, and we know that they are strong patterns. And if they fail, it was a pattern that never formed. So whereas I always like to say that there's nothing more bullish than a failed bearish pattern, there's nothing more bearish than a failed bullish pattern. Well, look, in this case here, it has to actually complete, fail, give you reversal signals in order for it to truly fail out there. So those are the levels. Now, there's one other area for us to be paying attention to. It all kind of comes together right in the same general vicinity out here. And that's really the beauty of what we're looking at, because you see, gold's got a 13.5-month type cycle that should have bottomed in July. And there really was no bottom in July. There was a bottom in June. Did it happen early, or is it now going to happen in August? You've got a month on either side out here. And if you take a look at gold, you come all the way back out to these highs back here in 2012, you'll see a trend line that gold broke out of. Maybe it's also just coming back to test that level as well. 877-927-6648. This is Steve Rhodes. Those are my views on gold. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we got gold lower, silver lower, copper lower, platinum lower out here. But to the upside, we've got the futures market. Also moving to the upside, you got Monster Beverage on that $2 billion investment that Coke is making into them. Gilead Sciences also popping to the upside out here. It closed at $93.96, trading up $6, trading out right now at $98 and change out here. GILD is the ticker symbol. And on the daily chart, no resistance out here. Really none whatsoever. Where is Gilead likely headed to? Probably best to look at a weekly chart out here. Let's switch over to a weekly chart right now, get a feel. If we take a look at the small A to B equals CD to the upside inside Gilead, my A point on this, we'll see if it actually crossed that B point with volume. The A point's going to be down here back on June 24, 2013. The B point all the way up here on the trading session of February 24th, and the C point retracement down on April the 7th. That B point had a volume of 52 million shares. It was passed with 54th hour it tested it. So that's a confirmed A to B equals C to the upside. 101.68 is the next stop for Gilead, but you can easily make the case 112.06 is on its horizon as well out there. Also to the upside, the Echelon Pharmaceuticals, it closed at 844. It's traded out at 9.95 as well. Applied Material, AMAT, That closed at $21.15. Right now trading up over $1, $22.30. Now it's going to have some resistance. It's got its market profile high resistance out here at 23.46. That's in line with the swing point high from July 7th. So if it can clear that with more than 71 million shares, that would be very bullish for Applied Material out there. To the downside, you've got the Nugget, the GLD, say all things gold, the Junior Nuggets, so forth. You've got JD Com. JD Com looks like this is a... well, let me switch this back to a daily chart out here. This closed out at $30, trading out at $28.65. Not too big of an issue out there unless there's volume that comes out of its balloon. Ought to find support probably right around the $26.92, $27.58-ish type range out there. NQ Mobile, that closed at $6.41. It's trading at $5.54. It's got a high volume low out here. That is likely its target area. If we take a look at NQ Mobile, here's your high. It's got a couple high volume highs out here. So that high volume high I'm looking at is July 18th. Anywhere from the 345 to 510 area, very likely where she is headed to. Now, let's go take a look at the futures markets, get an idea as to what's going on out here. Let's take a look at the NQ first. It's all about the NQ, all about the NQ, all about the NASDAQ. Right now, the NASDAQ is going to try to take out its trading into its swing point high. No reason for it to not go test that high itself. July 24th is the 39.91.25 level out there. You'll see that also at that price point area, you're going to see some diagonal yellow lines on my screen. And those diagonal yellow lines have been the rising price channel, a recent rising price channel. And it's really the one that price has been traveling in ever since the October 2013 time frame out here. And you can see that price has kind of gotten up into that area, and it's acted as a resistance level. So we'll see if, in fact, it does that. The blue lines on my screen, well, shoot, if you go all the way back to 2009, there's the rising price channel there. Now, prices above that level doesn't really mean a whole lot. It's kind of like it's not like it's a breakout. It was already moving up. So it just formed a new price channel that we want to focus in on and pay attention to. So we may see a little bit of a stall out here. It's really all going to be about the volume on a Friday and or a Monday, before we start to really get into the last couple weeks here of summertime for many folks out there. Of course, in Florida, it's like summer pretty much year-round out here. Expect this to potentially be an area of some resistance inside of the NASDAQ. If we take a look at the S&P 500 right now, take a look at the ES Mini. Its next target area is 1965. It's trading at 1958 right now. At 1965, it's going to run into the 0.786 retracement level. It's also going to run into the area where it broke down. It broke down on the candle session of July 31st. Just like price will come back to a breakout area, this is going to be interesting to see how this plays out here, because price is now making its way back to the area where it broke down from. Not the case of the Qs, but the Qs are running into a double top-ish type potential resistance area, so we'll keep an eye on that. So that's what's going on inside the S&P 500. And inside the Dow futures right now, the Dow futures hit the 0.618 retracement level. The actual high so far in the Dow futures, 16,737, and 16,740 is your 0.618 retracement level. Something to think about. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 41 points. Trading out at 16,754. S&P up 7 at 1962. Composite up 24 points. Trading at 44.77. Russell 2000 lead the charge here this morning, up 0.7%, up $7 and change. Trading out at 11.51. New York Stock Exchange up 40 points out there. Monster Beverage, Biogen, Kinder Morgan, Gilead Sciences, Cena, Actavis, Kinder Morgan, all leading the charge. The upside to the downside. Nordstrom's followed by all the gold ETFs out there. Amazon also trading down slightly off $1.35 right now. Weibo Corp down 5% off $1 out there. Let's take a look at some of these equities here that are popping and dropping. Monster Beverage, we don't need to take a look at that. Let's take a look at Biogen, BIIB. That's trading up 4% out here. No real news or anything inside of Biogen. So Biogen looks like I've got a consolidation box out here that it's been traveling, and there we go. So we've got Biogen, potential consolidation box. Right now, Biogen is trading back into its most recent swing point, or it's going to try to today. That's from the trading session of July 30th out there. And, what Biogen had was a nice sign of strength back here on July 23rd. Volume to the upside, 4.1 million shares out there. If it can take out this swing point, the high of July 30th, 349. If it can do it with more than 1.3 million shares, and no reason for it to not try to do it today, because already got 234,000 shares in 6 minutes of trading out there. So that's good. Then what we ought to see is price go tag and test the swing point out here, and really where it broke down from. So Biogen broke down. That's why it's really in a consolidation out here, because you had a big break to the downside with volume. So that's your supply line, and that is the high of March 21st, which is at 355. But you do have a top of the consolidation box, if you will. That's at the 358.89 level. So it'll be interesting to see if, in fact, now it's a nice consolidating pattern out here. You could probably even move it down just a little bit out here. I won't worry about that for the moment. But you're looking at between 275 and 360, so what, about a 90-point type move. If Biogen breaks either the upside or the downside, your measured move price projection would be in about that range out there. If we take a look at Charter Communications, CHTR is a ticker symbol. That's up 2% this morning. Let's go take a look and see what that is moving into. So Charter Communications trying to get over its most recent downdraft. That took place on July 31st, so much like the market. So this, the high out here is 168.48. It closed above that today would be nice and bullish. So long as it stays above 158.48 out there, suggests that it ought to come back and test its swing point high. What looks like a shooting star, but isn't. That's the July 29th time frame out there. That's at the 167.30 range out there. That's on Charter Communications. If we take a look at what else do I have? Cena Corp. Let's go take a look at Cena Corp. Up 6%, up $3 this morning. Looks like they're out with numbers. Generating net income of $16 million versus $11.5 million loss. That is a nice way to turn around the ship out there. Revenue is $187 million versus $157. So let's go take a look and see where Cena Corp is headed to. It's trying to take on its most recent swing point out here from July 2nd. If it can do that and get above that high, which is 52.77, do with more than 3.8 million shares, it's already then 632,000 shares. It would set up an A to B equals CD, and it would also be the first time in quite some time that it traded above a market profile high, moving this thing into full-out bullish mode. So it's got the volume. If it can pass that swing point, it's going to trade into it, so it's going to go test that level, or should test that level. Doesn't have to test it today, but, why not today? If it does get above that swing point, then the 1-to-1 A to B equals CD takes you up to about the 55.23 level out there. And at 55.23, it takes you into a little window that has not been tested, a little gap down between the trading sessions of April 23rd and April 24th out there. So that would be its next potential area of resistance, although the volume to the downside, 8.4 million shares on that move down. I guess that should be resistance. Let me see. Just trying to take a look at some other volume deals out here. Yeah, that really should be its next kind of resistance-ish type area. But nonetheless, it would be changing. It would truly be a change in its pattern out here, most certainly from bearish to bullish, and that is Cena. So we'll say a change in polarity potentially in play here for ticker symbol SINA. If we take a look at some things moving to the downside out here, we've got Dillard's. DDS is the ticker symbol. They were out with numbers. Net income of $34 million versus $36.5. Sales revenues flat as well, 1.47 versus 1.48. This thing is down. Looks like with some volume as well. Let's go see. So this is going to trade back at least into. There's a couple signs of strength out here with inside of Dillard's. Several. There's three signs of strength and one sign of real weakness, which is a high volume low back in the trading session of February 24th. So if all heck breaks loose out of Dillard's, that's where she would be headed down to, that February 24th level, 3.8 million shares down there. Now, Along the way up, off that bottom, there was some nice volume. There was a sign of strength, a junior-ish sign of strength on February 25th out there. There was another sign of strength, though. That took place on April 22nd. That's in the price range of $98 to $91 or so. There is a gap out here. Here's its most recent sign of strength. That's where it's headed to first. It's already trading into that candle session. That May 16th level had 2.6 million shares. The bad news is, well, I don't know if it's bad news yet. Only 195,000 shares, 200,000 shares in 10 minutes of trading. My math says that if it were to keep up that pace, that would be the bad news bears out there inside of Dillard's. So expect it to trade down into the level of 108.57 to 198 to 98.14. So 98 to the 102-ish area. We'll see if it can find some support there, and that is on ticker symbol DDS. That is on Dillard's. Also trading to the downside, Nordstrom's out here. So in one sense, the retailers here taking it on the chinny chin chin, much like many of the restaurants have as of late. Nordstrom's was out with numbers. They generated revenues of $3.3 billion versus $3.1. So they were able to grow the top line just slightly. And net earnings were flat, $183 million versus $184. In the case of this equity here, now this is trading right now inside of the gap. So if we take a look at that, trading session's not over, so we'll see if it can hold this gap. If it cannot hold this gap, then what it ought to do is trade down to the bottom of it. So the bottom of the gap is really the May 16th level. And that's a sign of strength out there, which was tested 2 or 3 times out here. Most recently was back on June 26th. That had 1.1 million shares. Now the breakout has volume of about 8.3 million shares out there. Today, so far, 1 million shares to the downside. So it's already in the gap. If it doesn't close above 66.75, says that it's likely going to pull back to the bottom of its sign of strength out here. And that's at the May 15th area, and that's right around 60.51, 61.8. Let's see, why has it got 61.80? Because 61.80 would be the top of that session. That's why. That's the May 15th level. And that is on Nordstrom's JWN. Now, in the case of Nordstrom's, no high volume low that it has to really be concerned with, unlike Dillard's out here. So if this can pull back to that level and volume starts to dissipate, that would be that would be coming back into a breakout area. If the broad market is continuing to motor on higher, that would be where your buy may be for Nordstrom's out there, JWM, being the ticker symbol. If we take a look at, so let's take a look. We got Royal Gold. Let's go take a look at a couple of the gold miners out here. Obviously, they're going to be tacked here with gold trading lower. So let's take a look at RGLD, Royal Gold. Let's take a look at its daily chart out here and get a feel for where it might pull back to. So the first level, it's traded right now back into its old resistance, which was in place yesterday. It looks like a new TAS market profile box has established itself today. If that's the case, it's trading below that level of support, its market profile low. But we'll pay more attention to this box that actually formed back here around July 23rd, July 24th. And that says the 74-ish area is an important area for it to hold. Now, let's take a look back and just do a couple of things here when we take a look at Royal Gold. We're going to take a look at retracement levels first. Let's try to set up potential buy. And how you time the miners is you time the miners with gold. And it's a retracement that's underway. And I do expect that we're going to see gold put in a bottom. I'd like it the bottom to be lower than where it's at right now. And maybe we get that today, tomorrow, Sunday, or today, Sunday, Monday morning out there. Maybe it's Monday afternoon. You know, I can't give you can't look at my crystal ball and give you that forecast. I wish I could. I've been working on that tool, but it's been very cloudy out there. Nonetheless, just a dead cat bounce, normal retracement back here is at 73.68 or so. That's your dead cat bounce, your 0.382 retracement. And that is coming off the lows out here from May the 28th. Now, along the way, we've seen a couple of signs of strength inside of this. The most recent one that I would say you'd be looking at, because there was some wide price spread with some accelerated volume. That was on June 19th. Interestingly enough, June 19th, the top of which is 73.81, and the dead cat bounce is 73.68, and the bottom of yesterday's profile box right around 74. $24. So that's going to be a pretty good target area to let us know what's going on inside of Royal Gold. If it breaks through that area, well, then price probably comes all the way back to the 68.02 area, and you'd like to see that start coming back with light volume. So far today, 152,000 shares made a high out here with 824. So we are seeing volume accelerate. That benchmark number right around the 1.1 million level. That, again, was its real last sign of strength on June the 19th. That is on Royal Gold out there, RGLD. What other? Let's take a look at Rand. Let's take a look at Rand Gold. GOLD is the ticker symbol. That's only off $1.34 out here, so that's not too bad. But let's go see what it's actually doing. So it now today has closed below its market profile, its support area, which is 84.63. If it could close back above 84.63, that would be relatively impressive. Now, the volume out inside this right now, this equity, 128,000 shares, and its most recent swing point takes us back to August the 5th. That's only got 409,000 shares. So if it busts through this swing point, let's do the same thing out here. Let's go take a look at retracement levels. We'll come back to the swing from June 3rd, 2014. June 3rd out there. Remember the last, when we were taking a look at gold during the, during the first segment, it was at June 3rd, June 4th time frame where gold was also bottoming. So you'll be able to time this. Now, the dead cat bounce off of that June 3rd low to the high that was put in here on July the 10th. That would be 83.11. You trade at 83.75 right now. So that's your first target area. If we take a look at signs of strength, it too has a sign of strength back on June 19th. That high is $82.94. So you get $82.94, $83.11. If the miners can if we can see gold bottoming, and the miners are only do a 0.382 retracement, boy, it tells you that the next move up is huge. Really, because I mean those set up large A to B equals C. We'll take things one step at a time, one moment at a time, because you can make the case here inside of Rand Gold, with it breaking through its most recent swing point, and depending on how volume continues up here, you could make the case that Rand Gold could be set up a small A to B equals CD to the downside. That would suggest that price would get down into the 81.16, 79.59 area, and at 78.92 you've got your 0.618 retracement. So that's what's going on inside the world of Rand Gold. Have a request to go take a look at silver wheaten. SLW is the ticker symbol. So let's go check out SLW. While I'm doing that, folks, what you should be doing is you should be heading yourself right over to the homepage of TFNN.com. We are running our Tiger Dollar promotion out here. You get we match for every dollar you invest in yourself, we'll add an additional 40% to that. It's a special that we do just a couple of times a year. Tiger Dollars are a way for you to be able to apply those purchases, that investment in yourself towards any services that we have here at TFNN. So it's a great opportunity. That's going to expire in the next 9-10 days, I believe. So what you want to do is you want to get yourself over there pronto. You should be doing it right now. All the details on the homepage of TFNN.com. If we take a look at silver wheaten for our man Danny in Atlanta, what silver wheaten has done here, it has now closed below its market profile support level, which is 25.81. Getting back above that today would be very nice. It's also dealing with a couple of swing points out here that it is trading below. July 15th at 6.8 million shares the downside, 3.2 million shares on August the 5th. So trading below that says that this probably pulls back to its sign of strength, which is June the 19th. Let's do the same thing out here. We're just simply going to come from our swing point low, May 28th in this case, all the way to the swing point high out here, and that was on July the 10th. And that says the 0.382 retracement, 24.75. If it closes below that, Danny, what you're looking at is probably moved down to about the 22.94 area out here. But it does have a good sign of strength. June 19th, that price range, 25.14 to 23.91. This is Steve Rhodes. This is TFNN. As always, a pleasure to be with you. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 44, S&P's up 7 points, NASDAQ up 23, Russell 2000 up 5 points right now. Let's go back and check in on gold out here, see if there's anything that we overlooked when we were taking a look at where some price targets were headed to. So gold right now trading out at 1296.10. And let me do this here. Let me get rid of that. So if we take a look at also the most recent, so we got that 3 drive to a bottom, potential 3 drive to a bottom pattern. Price really needs to move down. That would be the 1268 area. So you're looking at about another $30 or so between today and tomorrow. Today and I keep saying tomorrow. Today and Sunday, Monday out there in order for that pattern to complete. And that way we're not forcing anything. So that's one possibility. That also gets back, remember, to the breakout session from June the 19th. If we do take a look at just simply current retracement levels off of its most recent low to its most recent high, we'd be coming down from the July 31st low to the high out here on August 18th. Now, price right now is traveling right at the 0.618 area, 1297.30 is that number, or 1296. Now, this is a wide-ranging bar out here, and that wide range, as we speak right now, I have no idea how the session finishes out here. Hey, look, if the bulls step in and they push this up and we end up with a small-bodied candle up here like we've seen for the last 2, 4, 5 trading sessions out here, and a long lower shadow out here, that'd be very bullish out there for Goldilocks, especially if it can get back up above its market profile high. I think that's like 12.99, so you're not that far away from it. But if it closes like this today here, you've got a wide-ranging bar to the downside, and really suggests that breakout session, that 1269 area, becomes a pretty decent target for gold. So, so that's what I see. Nothing really has changed there. If we were to take a look at silver, take a look at what silver is doing out here. As we all know, silver has been the weaker of the two as of late. Right now, silver is trading below its 0.618 retracement off of its most recent swing point low to high. And that takes us back into the May 30th low to the high out here on July the 10th. So closing below 1976 today. You can see that what silver's trying to do. Remember, here's the breakout session, that wide-ranging bar, and kind of our benchmark to come back to a breakout level. It's where it's trading into right now, and that's this little trading session from June the 17th. No type of candle formation that represents, meaning it looks like a hammer, smells like a hammer, but there was no downtrend, so it's not a hammer candle. So it's just a little juniorish style swing point, but more so it's really where we saw gold break out from out there. If you see a close below that, I'm going to go with here. If you see a close below 1943, 1926 is in the cards. But, the problem with what silver's actually doing here this morning, it's coming all the way back to that original swing point from the trading session on June 28th out there, and the top of which was 1963. I just kind of take a look at that. That's an important swing point to not be taken out to the downside. That price point, by the way, $18.18 out here. So, we'll kind of time the two of them together, but it looks like the target for silver probably 1926 as far as I can see out there. So, folks, it's been a great trading week. Been great to be with you. Stay tuned. Our man Daryl Martin is going to be up. He'll take you through the Nadex Bull Bear binary platform out there, and I'll be back with you on Monday morning. It is Fantastic Friday. Have yourself a fantastic weekend. Don't forget about our Tiger Dollar promotion out there. It's a good time to take advantage of it. So if you can't get to it this moment, do it in the next moment, or certainly do it over the weekend. So have a great weekend, folks. Look forward to seeing you Monday morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.